Okay, sir.
Uh, when we will revise the figures, காசா percentage கிடைக்கல, சரி பரவாயில்ல, அதை விட்டுடுவோம். So we will go through the figures first. Please go through Bank of Maharashtra figures as on 31/3/2025. Please read. Deposits.
Yes. Deposits rupees 3.07 lakh crores. Advances rupees 2.40 lakh crores. Net profit rupees 1,493 crores. Gross NPA percentage around 1.74. Net NPA is 0.18%. Return on asset 1.78%. Return on equity 23.08%.
இதெல்லாம்
Capital
வேண்டாம், இது
adequacy
வேண்டாம். Capital adequacy ratio
20.53%. Number of branches around 2,500.
2500 plus அப்படின்னு போட்டுறேன், சரியா போயிடும். Okay, that will do. Now, after that, what is required is, next one I have given you is role of a credit officer, because sometimes they ask you what is the role. So please go through this so that you can update your skill. Please read.
Yes, sir. In India, a bank credit officer plays a crucial role in managing, facilitating the lending activities of a financial institution. Here are the key responsibilities and functions typically associated with this role. Credit analysis and risk assessment. The primary responsibility of a credit officer is to assess the credit worthiness of individuals and businesses applying for loans. This involves analyzing financial statements, credit histories, and other relevant information to determine the risk associated with the extending credit. Loan structuring. Based on the credit analysis, the credit officer determines the terms and conditions of a loan, including the amount, interest rate, repayment schedule, and collateral requirement, if any. They ensure that loan structure aligns with the bank policies and regulatory requirements. Customer relationship management. Credit officers interact with the loan applicants to gather information, explain loan options, and discuss the terms and conditions of the loan. They also maintain relationship with the existing customer to monitor their financial health and ensure timely repayment. Compliance and documentation. Ensuring compliance with regulatory guidelines and internal policies is critical. Credit officers are responsible for preparing and maintaining accurate loan documentation, including legal contracts and security agreements. Monitoring and review. After disbursing loans, credit officer monitors the borrower's financial performance and compliance with the loan covenants. They conduct periodic reviews and assessments to manage risk effectively and take appropriate actions in case of delinquency or default. Credit policy implementation. Credit officers play a role in implementing the bank credit policies and guidelines. They stay updated with the industry trends, economic conditions, and regulatory changes to make informed lending decisions. Collaboration with other departments. They work closely with the other departments within the bank, such as legal, risk management, and operations to ensure smooth loan processing and mitigate potential risks. Credit portfolio management. Managing the overall credit portfolio of a bank is another critical aspect. Credit officers balance loan growth objectives with the risk assessment strategies to maintain a healthy and profitable loan portfolio. Credit appraisal. Conducting thorough credit appraisal of new lending proposals, including assessing the viability and feasibility of the project or business for which the loan is sought. Credit monitoring and recovery. In case of delinquency or default, credit officer initiate recovery actions in accordance with the established procedures, which may include negotiating repayment terms, indicating legal actions, or
Initiating
legal actions or implementing recovery strategies. Overall, the role of a bank credit officer in India is pivotal in ensuring responsible lending practices, managing credit risk, and maintaining a financial health of an institution's loan portfolio. It requires strong analytical skill, attention to detail, knowledge of financial markets and regulatory framework, as well as excellent communication and interpersonal skills to interact effectively with the customers and internal stakeholders.
Good. This one you read and you won't be able to talk this much length in a
Yes, sir.
question that they give you. So you
Yes,
out of them, you give a brief answer. Say in a 1 minute, you must be able to cover the
yes,
important aspect like you will tell about credit analysis and risk assessment and also the structuring of the loan and the credit officers as to maintain customer relationship management must ensure compliance and documentation, and then
yes, sir.
he should monitor the loan account and review it properly. And then next point is this one. He must collaborate with other departments so that smooth functioning is established. Then
Yes, sir.
a recovery aspect also must be given more importance by the credit officer. And I have been doing it in my office, so I am more suitable for this post.
Yes, sir. Sure, sir.
Good. Are you applying for SBI CBO? No.
No, sir.
Age.
Age limit.
Acha, very good. Age limit problem. Good. Very good. Now continue with this. Credit appraisal process procedure. Please read. The
Yes,
credit
sir.
appraisal process.
The credit appraisal process in India typically follows a structured procedure to evaluate the credit worthiness of borrowers before extending credit facilities. Here's the general outline of the process. Application submission. The borrower submits a loan application along with the necessary documents to the financial institution.
Like bank or NBFC also. Yeah. Continue.
Initial screening. The lender conducts an initial screening to assess if the applicant meets the basic eligibility criteria such as minimum income requirements, age, employment stability, etc. Credit investigation. This involves a detailed verification of the applicant credit history, income sources, existing liabilities, repayment track record, other financial aspects. The lender may use the credit information agencies like CIBIL Experian for this purpose.
Hmm.
Analysis of financial
Now, in
statements.
your bank, which ones are you using?
Sir, CIBIL, sir.
CIBIL only. Very good. Very good. Continue.
Analysis of financial statements. For a business loans or higher amounts, detailed financial statements are balance sheet, income statement, cash flow statement are analyzed to understand the borrower's financial health and repayment capacity. Assessment of repayment capacity. The lenders evaluates the applicant's ability to repay the loan based on their income stability, existing obligations, and the proposed loan terms, interest rate, tenor, and etc. Evaluation of credit worthiness. A credit score or rating may be assigned to the borrower based on the credit assessment process. This helps in quantifying the risks associated with the lending to the borrower. Decision making. Based on the findings from the credit appraisal process, a decision is made regarding whether to approve or reject the loan application. If approved, the terms and conditions of the loans are finalized. Documentation. Once approved, the borrower and the lender execute loan agreement and other necessary documents outlining the terms of the loan, including repayment schedule, interest rate, fees, etc. Disbursement. After completing all formalities and documentation, the loan amount is disbursed to the borrower's account. Monitoring and follow. Post disbursement, the lender continues to monitor the borrower's repayment behavior and financial status to ensure adherence to the agreed terms and manage any risks. It is important to note that specific procedures and criteria can vary between different financial institutions and the type of loan being applied for. Personal loan, home loan, business loan, etc. Additionally, regulatory guidelines from entities like
Entities. Hmm.
India also influence the credit appraisal process in the country.
Yeah, both are same. Previous answer and this both are same. So
Yes, sir.
club these two and make your own answer.
Yes, sir.
Then this one is what is this? Uh, Alva Gates legal news and blogs concept of consortium financing. This is about consortium financing.
Yes, sir.
That is for people who might not have done big advances knowledge of this will be helpful. Oh, what happened? It's not coming. Then, if that is not coming, what we can do to google.co.in
Yes, sir.
India Consortium Financing by Banks. So, what is consortium finance? This is an important question. So,
Yes, sir.
please read this. Consortium lending. Please read.
Occurs. Yes, sir.
Hmm.
Consortium occurs when multiple banks or financial institutions work together to lend to one borrower. This usually happens for large projects costing over 1,500 crore. The Reserve Bank of India closely governs consortium lending. It pools financial resources and expertise, spreading risk among lenders. For instance, RBI rules state that each lender must contribute to at least 10% of a loan for projects up to 1,500 crore. For large projects, the requirement is 5% or 150 crores. In 2024, the RBI updated rules to mandated phased provisioning for these loans, starting at 2% by March 25. It will rise to 5% by 2027. Consortium lending is vital in sectors like infrastructure and renewable energy, where single institution may face capital challenges.
Vital, not vital. Vital.
Okay, sir.
Vital na important.
Okay, sir.
Continue.
Why consortium lending is essential in debt planning? Consortium lending offers key advantages, especially in risk mitigation. Picture a 2000 crore project. Dividing this amount means each lender minimum exposure could be just 150 crores. This significantly lowers the risk of loss from borrowers' defaults. It also helps banks comply with the RBI rules, which limit exposure to any borrower to 25% of bank's total capital. Additionally, consortium lending pools expertise enhancing the quality of loan appraisal and due diligence. This is crucial for renewable energy projects like those from IREDA, which have specific debt to equity ratios for funding. Consortium arrangements also assist banks in meeting priority sector lending targets by collaborating with the NBFC.
1 minute.
Recognize,
Recognizing.
recognize challenges and limitations. However, consortium lending has challenges. Coordinating multiple banks, often five or more, can be complex and costly. Lead bank may charge fees of 0.15% to 0.20% for managing loans over 200 crore. Each lender also face liability risk based on their share. For example, if a 1,000 crore loan becomes a non-performing asset, a lender with a 10% share faces 100 crore loss. New RBI provisioning rule pressure banks to set aside large reserves affecting liquidity. Documentation delays are another issue. Multi-bank agreements in public-private partnership projects can delay disbursements by 6 to 12 months due to
Context. Complex contracts. Yeah. Next, strategic tips.
strategic tips for effective consortium lending. To handle these challenges well, banks should follow the RBI's exposure flows. They must maintain at least a 10% participation rate in smaller loans to avoid regulatory issues. Using technology is also crucial. In 2024, public sector banks launched unified online portals to streamline approvals and recover NPA, cutting turnaround times. Banks should adopt dynamic provisioning practices, setting aside about 2 crore quarterly for every 100 crore lent. This aligns with our phased provisioning.
It is fun, for every 100 crore lend, we have to provide 2 crore.
Yes,
Because
sir.
there is a possibility of the loan becoming NPA. Continue. This aligns.
This aligns with RBI's phased provisioning schedule. Collateral strength is key. Ensuring a 1.2 into debt service coverage ratio through bank guarantees or fixed deposits can protect lenders from project failures. Regular joint audits, especially for sectors like energy, help maintain at least 75% asset coverage, reducing risk like asset diversion.
Actually, in areas like infrastructure industries like power sector, then steel sector, all these sectors, the risk is very high. In fact, many of the many steel plants that were started earlier, they have proved a failure. Yeah. Now, that much will do for this. I will give this link in that page. 1 minute. Where are we now? Where are we now? This one. I think I can remove this. This is not required. And instead of that, I can give this one. This one. Just a minute. Yeah, I can give. Acha, editing பண்ணுமா? Correct. Editing கொடுத்தாதான் அது வரும். ஓகே, டன் கொடுத்தாச்சு. இப்போ என்ன பண்றோம்? மேலே போறோம். இது என்ன சொல்லியிருக்கேன்? WWPNB India Board of Directors.
It's for Punjab.
பஞ்சாப் நேஷனல் பேங்க் உனக்கு தேவையில்லை. ப்ரொவிஷனிங் நார்ம்ஸ், திஸ் இஸ் வாட் த ப்ரொவிஷனிங் நார்ம்ஸ் ஆர். உங்க பேங்க்ல கிளியரா இருக்கா? இதை விட இதுல வந்து ஐ எம் நாட் அப் டு திஸ், இட் இஸ் ஓகே. ஸ்டாண்டர்ட் அசெட்டுக்கு இது ஓகே, சப்ஸ்டாண்டர்ட் அசெட்டுக்கு இது ஓகே. டவுட்ஃபுல் அசெட் அன்செக்யூர்ட் 1 year, இல்ல செக்யூர்டு. அன்செக்யூர்டு கொடுக்கவே இல்லை. அன்செக்யூர்டுக்கு கொடுக்கவே இல்லை.
For doubtful asset, unsecured 100% provisioning, sir. For 3 category, 1, 2 and 3.
3ல அதாவது இதுக்கு எப்படிமா சப்ஸ்டாண்டர்ட் அன்செக்யூர்ட்னா 25%, இங்க 40% வரும் இல்லையா?
Yes, sir. Doubtful assetக்கு first doubtful 1க்கு வந்து 25% for secured, sir.
சரி.
Doubtful 2க்கு வந்து secured 40%.
ஓ, அதுதானா இது? 1 2 3 40%.
Doubtful 1 2 secured, doubtful 3 secured, unsecured 100%.
அதுதான் போட்டிருக்காது. சரி, ஓகே.
For all secured advances in doubtful category, 100% provisioning has to be made, sir.
Very good. So அது தெரிஞ்சுக்கோங்க போறோம். Okay, very good. Now, apart from this, when you come for an interview like this, of course, for
Yes,
commerce students, you are not a commerce student, இல்லையா?
No, sir.
So for you, not much of these questions will come, but say in your level, when you are going for scale 2 and all,
Yes, sir.
they will go at a, for example, they will go on some simple questions, means they may ask you to explain about all that we were given here. What is GNPA percentage? What is NNPA percent? That is, you should explain how it is arrived. What is
Yes, sir.
return on asset? What is return on equity? Concepts. You should be able
Yes.
to explain about that. Okay.
Yes.
Once that is over, then this role of an officer, then provisioning, then in bank interviews, normally these questions are common. What are intangible assets? Can you
Yes,
tell
sir.
me what is an intangible asset?
Yes, sir. Intangible assets are assets which cannot be which do not have any physical form, which cannot be touched and felt. So the examples of intangible assets are goodwill, patents, trademark,
Rights.
and
Rights. Rights.
and license.
RIGTH. Licensing rights, whatever it is. Good. That is correct. Intangible assets. Another favorite question in bank interviews is this one. What is contingent liability? Where it will appear in the balance sheet. What is your
Yes, sir.
answer?
Contingent liabilities are non-fund based exposure. It appears in the off balance. It's a off balance sheet exposure. It appears in the Bottom, it appears in notes to accounting. In that column, under that column, it appears.
Very good. You told correctly. But contingent liability definition, avvala சரியா வரல.
Yes,
Contingent
sir.
liability, India, contingent liability definition.
US Secretary of State Marco Rubio held a phone call with your Prime Minister. You have shared some writing this. Yes.
Please read. Are you seeing on the screen? No. No. I'm showing you now. Please read. In the context of Indian accounting.
Yes, sir. In the context of Indian accounting and finance, a contingent liability is a potential obligation that may arise in the future, contingent upon the occurrence of specific events.
ஆஹா நீ என்ன பண்ண நீ என்ன சொன்ன நான் ஃபண்ட் பேஸ்டுன்னு சொல்லி முடிச்சிட்ட ஸோ தப்பு இல்லை பட் திஸ் இஸ் அ ப்ராப்பர் டெஃபினேஷன் ப்ளீஸ் ரீட் அகைன் இன் தி கான்டெக்ஸ்ட் ஆஃப்
Indian accounting and finance, a contingent liability is a potential obligation that may arise in the future, contingent upon the occurrence of specific events.
It may arise contingent upon occurrence of specific events. It may or may not happen.
Yes, sir.
Yeah, tell me next. It is a
It is liability impact on any financial position if certain conditions are met. For example, this could include outcome of pending lawsuit, potential for warranty claim, or the consequences of regulatory investigation.
Continue.
Characteristics of contingent liabilities: uncertain future event. The liability depends on a future event that is beyond a company's immediate potential obligation. It is a possible obligation that may or may not depending on how events.
I think your internet is not good. Some problem.
My internet, sir?
Yeah, your internet is not good because now sound is it is breaking quite often. Now continue. Disclosure.
Disclosure in financial statements. While not always recorded in the balance sheet, contingent liabilities must be disclosed in the financial statement footnotes if the probability of their occurrence is high and the financial impact can be reasonably estimated. Examples: pending lawsuits, product warranties, financial repercussions from pending legal cases, and regulatory investigations are all examples of contingent liabilities. When to record a contingent liability? Contingent liabilities are typically recorded when both of these conditions are met. Probable loss. It is a probable that the loss has been incurred. Reasonably estimated amount. The amount of loss can be reasonably estimated. If these requirements are not met, the liability is usually disclosed in the financial statement footnotes to ensure transparency and allow stakeholders to assess the company's risk exposure. Bajaj Broking says this is essential for investors to understand the company's financial health and potential risk.
Really, all this they are talking from the angle of investors. That is those
Yes,
who
sir.
are investing money in the company's shares and all. What I will do, I will give this material. Maybe I have given it already, I don't know. I will give it here as an extra material.
Sir, I have one doubt, sir.
Tell me.
Whether we have to make provision for these contingent liabilities also, sir?
No.
Okay.
No. Contingent liability, only when it materializes, we have to provide. You understand? Only when
Yes,
it is materializes to be our liability, then we have to provide for that one. Good. Now, next question. This is a very vague question, normally suitable for PO, not for scale 2, but still, can you try this? What is the significance and purpose of financial statement analysis? Similarly, what are the principal tools of ratio analysis and interpretation? இதை பத்தி சொல்ல முடியுமா? 23.
Sir, I'm not able to view the question, sir.
Oh, sorry.
Yes, sir. Sir, financial statement is through which financial statement we can analyze the quantitative measure of the borrower, sir. Actually, through financial statement, we can analyze the past performance of the company. Also, through the projections, actuals, through projections, we can access the, based on the past performance and the actual performance, we can access the projected performance of the company, whether that is that can be accessible, that is acceptable and reasonable, we can identify.
Super. Very good. You explained nicely. Very happy. Please tell about this.
Ratio analysis and is a crucial tool in assessing the business performance of the borrower. There are few ratios. First one is a liquidity ratios. Through liquidity ratio, there are two types under which current ratio and quick ratios. In current ratios, we analyze the current asset divided by current liabilities, through which we arrive the short-term ability of the borrower to serve, meet out the short-term obligations. It tells the ability of the borrower to meet out the short-term obligation. Quick ratio is a current asset excluding stock divided by current liabilities. It tells when excluding a stock, it tells the ability of the borrower to meet out the current liabilities. Since it excludes stocks, as it may not be easily convertible into cash, it is excluded.
No. The second portion is not required. First portion is what is quick ratio. Quick ratio is current assets less inventories, not stocks.
Yes,
Plus inventories divided by current liabilities. That will do. You need not explain why we are reducing inventory. We are supposed to know that only we are coming to this question. If at all they want, they will ask, why are you reducing inventories? Then you have to explain.
Yes, sir. The second one is a solvency ratios.
Tell
In
me.
solvency, we measure the debt equity ratio. Debt equity is a total debt divided by equity. It tells ability of the, it tells how much the borrower is dependent on the borrowed funds. Then it's own equity. And TOL by TNW is a total outside liability or tangible net worth ratio. It measures the comprehensive measure for how much it measures the whether the company is solvent. The ideal TOL-TNW ratio is 5:1.
Which ratio are you telling?
Solvency ratios are total outside liabilities divided by tangible net worth.
1 minute. Solvency ratio. Just a minute.
Yes, sir.
1.5 times. 5 times the person. You told 5 times. You please read this.
Sir, it's something related to banking, sir. It's related to insurance. Yes, sir.
Banking. Insurance companies. For banking, we should go for India banking. What is solvency ratio in banking? The solvency ratio
is used to determine the minimum amount of common equity banks must maintain on their balance sheet.
I think they are talking about capital adequacy ratio, CAR.
Yes,
அப்புறம்
sir.
the solvency ratio மேல படிங்க.
Solvency ratio, also known as a risk-based capital ratio, is calculated by taking the regulatory capital divided by the risk-weighted assets.
But is this what you were suggesting or you were telling something else?
Sir, I am telling about the debt equity ratio, TOL or TNW and ICR. I was about to tell about the interest coverage ratio. These are all the three solvency ratios. We look at the validate the ability of the client to meet out its obligations, sir. TOL per T.
Very good. You are talking from assessing the customer. That is what we want. But this is what about bank.
Yes, sir.
This is telling about bank. So அப்ப நீங்க சொல்றது ரைட் ஷேர் இதுவா இருக்கும். One minute.
Yes, sir.
The main solvency ratio or debt to assets ratio, the interest coverage ratio, the equity ratio, debt to equity ratio. These
Yes,
measures may be compared with liquidity ratios, which considers the firm's ability to meet short-term obligations. இதுதான் நமக்கு வேணும். Correct. I will give this in our material somewhere here. After this, I will give this. So that somebody wants, he can verify that always. And அதுக்கப்புறம் இப்போ என்ன பண்ணணும், நம்ம திரும்ப அங்க போனோம். சரி, இதுல என்ன சொல்றான், இது படிமா. இன்ட்ரெஸ்ட் கவரேஜ் ரேஷியோ.
The interest coverage ratio is calculated as follows. Interest coverage ratio equal to earnings before interest and tax divided by interest expenses, where
EBIT
tax. The interest coverage ratio measures how many times a company can cover its current interest payment with its available earnings. In other words, it measures the margin of safety a company has for paying interest on its debt during a given period. The higher the ratio, the better. If the ratio falls to 1.5 or below, it may indicate the company will have a difficulty meeting the interest on its debts.
Okay, next.
Debt to assets ratio. Debt to assets ratio is calculated as follows. Debt to assets ratio, debt divided by assets. The debt to asset ratio measures the company's total debt to total assets. It measures a company's leverage and indicates how much of the company is funded by debt versus assets, and therefore its ability to pay off its debt with its available assets. A higher ratio, especially above 1.0, indicates that a company is significantly funded by debt and may have a difficulty meeting its obligations.
Okay. Then equity ratio.
The shareholders' equity ratio is calculated as follows. Shareholders' equity ratio equal to total shareholders' equity divided by total assets.
Then next.
The equity ratio or equity to assets shows how much a company is funded by equity as opposed to debt. The higher the number, the healthier a company is. The lower the number, the more debt a company has on its books related to equity.
Okay.
Debt to equity ratio is calculated by as follows. Debt to equity ratio, debt outstanding divided by equity. Debt to equity ratio is similar to debt to asset ratio in that it indicates how a company is funded, in this case by debt. The higher the ratio, the more a debt the company has on its books, meaning that likelihood of a default is higher. The ratio looks at how much of a debt can be covered by equity if the company needs to liquidate.
No, don't just look at
one ratio from one period. Most financial ratios are able to tell more of story when you look at the same ratio over time or look at the same ratio across similar companies.
Super. Next. Solvency ratios.
Solvency ratios versus liquidity ratios. Solvency ratios and liquidity ratios are similar, but have some important differences. Both of these categories financial ratio will indicate the health of the company. The main difference is that solvency ratios offer longer term outlook on a company, whereas liquidity ratios focus on shorter term. Solvency ratios look at all assets of a company, including long term assets such as bonds
No,
with
no,
a
no.
maturity longer than a
Long-term debts.
long-term debts such as bonds with maturities longer than a year. Liquidity ratio, as on other hand, look at just the most liquid assets such as cash, marketable securities, and how those can be used to recover upcoming obligations in the near term. If an investor wants to know whether the company will be able to pay its bills next year, they are often most interested in looking at the liquidity of the company. If a borrower company is illiquid, it won't be able to pay its short-term bills as they come due. On the other hand, investor more interested in a long-term health assessment of a company would would want to analyze solvency ratios.
Actually, talking about this, today, I don't know about today, yesterday, the share market rose by over 3%. You know that?
Yes, sir. No, sir.
Yeah, it rose more than 3%.
Yes,
In
sir.
in India, it is 3%. Okay. But you know what happened in Pakistan? It
Oh,
rose by 10%.
oh, I see.
Today, it has come down by 1,281. No problem. Coming down by a small amount is not a big issue. So so we don't know, possibly due to war, and
Yes, sir.
maybe that is the reason it has gone up and all that. Very good. Now we are coming to the important point now only. Continuous limitations of so அது கூட தேவையில்லை. Examples solvency ratios இது கூட தேவையில்லை. How a solvency ratio is calculated? Is high solvency ratio good? Is solvency same as debt? Bottom line என்ன சொல்றேன் பாருங்க படி. Solvency ratios.
Financial measurements that usually look at a company's total assets, total debt, or total equity to better understand the company's financing structure.
Okay. Mm, this much will do for this question. Now
Yes, sir.
we will go to ratio, long-term liquidity, short-term. இது இன்னும் கொஞ்சம் படிச்சுக்கோங்க. அப்புறம்
Yes, sir.
advantages, limitations of ratio analysis. இது ரொம்ப theoretical question. இது அவ்வளவு தூரம் கேட்க வாய்ப்பு இல்லை. இருந்தாலும் நீங்க படிச்சு வச்சுக்கோங்க. Comparison of financial statement, various sources and application of funds, calculation of funds from operations, preparation of funds flow statement, schedule of changes in working capital, uses of funds. இதெல்லாம் நம்ம வந்து பார்க்க முடியணும் in our
Yes, sir.
analysis of the statements.
Yes, sir.
Then meaning, this question is quite often they ask meaning of cash flow statement and distinction from funds flow statement. Accounting standards AS3. Accounting standards பத்தி உங்களுக்கு தெரிஞ்சிருக்க நியாயம் இல்லை. Yesterday I have posted a video on accounting standards. It's a very lengthy procedure. வேண்டாம் அதை விட்டுடுங்க. Preparation of cash flow statement இது உங்களுக்கு தெரிஞ்சிருக்கணும். இந்த
Yes, sir.
கொஸ்டினுக்கு நீங்க ப்ரிப்பேர் பண்ணுங்க. Next time when we meet I will ask you. Then
Okay, sir.
இதெல்லாம் நமக்கு வராது, ஆடிட்லாம் வராது. They can also ask you what is the capital and money market distinction. Then
Yes, sir.
அப்புறம் இதெல்லாம் ஹாரிசான்டல் இது வராது. Functions of management, foreign trade, import. இது வந்து not for everybody. And because you don't have exposure in foreign trade கேட்க மாட்டாங்க. If somebody has been dealing with that, இதெல்லாம் கேட்பாங்க உங்க. They will ask you about motivation concept, leadership concept, why you must be selected, credit monitoring analysis. இதை படிக்கணும். நீ படிச்சு வச்சுக்கோ. அப்புறம் priority sector advances, small finance bank, இது மட்டும், that's all. All these questions were written by me. But
Yes,
these
sir.
are the questions actually asked in the interview.
Okay,
First
sir.
is introduce yourself, why you want to come to this bank, why you did not apply for banking job before, what is CMA, what are different reports of CMA. I don't know
Yes,
the
sir.
answer. நீ படிச்சுக்கோமா, படிச்சுட்டு நாளைக்கு
Uh,
சொல்லணும் நீ. What is
இல்ல இப்ப
profitable? இப்பவே சொல்ல முடியுமா?
yes, sir.
அப்ப சொல்லு பார்க்கலாம், ஆச்சரியமா இருக்கு. சொல். What is
See,
CMA? What are the different reports of CMA?
yes, sir. So, credit monitoring arrangement is a financial report that summarizes the past performance of the company and present actual performance and future projected performance of the company. It is the only report which provide all the details about the historical data and the projected data. There are seven components of CMA reports. See, first one is existing and the proposed liability. Second, analysis of balance sheet. Third one is the operating statement. Fourth is assessment of MBBF. Fifth, fund flow statement. Sixth is analysis of current asset and current liabilities. Seventh one is ratio analysis. It is the only statement which gives a financial snapshot of the company on year basis. Thank you.
சூப்பரா சொன்னமா.
Yes, sir.
குட். கரெக்டா சொன்னேன். Other documents, information required to prepare CMA, previous 2 years audited financials, latest sanction letter, you are not seeing, na?
I am seeing, sir.
Provisional financial current year, term loan repayment, details of proposed enhancements. பட் இது நீ சொன்ன மாதிரி இல்லையாம்மா, நீ சொன்னது ரொம்ப நல்லா சொன்ன. அதாவது 7 forms.
Yes, sir. I just read it in my internal circular, sir. In our internal.
இது பார்ப்போம், இது என்ன சொல்லியிருக்கான் பார்ப்போம். கிரெடிட் மானிட்டரிங் அரேஞ்ச்மெண்ட் இன்சைட். இது நம்ம டவுன்லோடுன்னு வருது, என்ன பண்ணுங்க? இது வேண்டாம்.
லேட்டர்.
இது டவுன்லோட் பண்ண.
இது அட்வர்டைஸ்மென்ட் தான், லேட்டர் கொடுங்க.
லேட்டரா? லேட்டர் போட்டேன். இதுக்கா?
இது அட்வர்டைஸ்மென்ட்ஸ் வருது, சார்.
ஓஹோ, அது என்னமோ படுத்துறது அது. என்னால கண்டுபிடிக்க முடியல.
டுமாரோ ஷேர் பண்ணுங்க சார் அந்த டீடைல்ஸ் ஆஃப்.
நான் பண்ணுமா, ஆஸ் இட் இஸ் அது போதும். இப்ப இன்னும் கொஞ்ச நேரத்துல முடிச்சிடலாம். இப்ப என்ன சொல்ல விரும்புறேன்னா, ஒரு நிமிஷம். நான் ஏதோ காமிச்சிட்டு இருந்தேனே.
சிஎம்ஏ அது ரிகார்டிங் क्वेश्चंस.
ஆமா, क्वेश्चंस பார்த்துட்டு இருந்தோம். இதான் படிச்சிட்டு இருந்தோம். இதுல வந்து இனி நாளைக்கு வரும்போது இந்த ஒரு பேப்பரை ஆன்சர் பண்ற, 1-2 பேப்பரை ஆன்சர் பண்ற மாதிரி வாமா. ஃபர்ஸ்ட் 2 क्वेश्चन பேப்பர்ஸ் ஃபுல்லா படிச்சுட்டு அப்படியே சொல்லணும்.
ஓகே சார்.
ஆர்பிஐ சர்க்குலர்ஸ்னா உனக்கு டு யூ ஹேவ் அந்த உங்க பேங்க்லயே வந்திருக்க ஒரு லேட்டஸ்ட் ஆர்பிஐ சர்க்குலர்ஸ் ரிகார்டிங் கிரெடிட், அதை படிச்சுட்டு சொல்லு. இல்லையானா யூ கேன் ஹேவ் மை சிடிடிஐ மேகசின், அது இருக்கு இல்லையா உனக்கு?
இருக்கு சார், இருக்கு சார்.
இருக்குல்ல, பின்ன என்னமா, நோ ப்ராப்ளம். ஏதான 2-3 பேப்பர் படிச்சுட்டு வாமா, அப்படியே படிச்சுட்டு வரணும் நீ.
ஓகே சார்.
என்கிட்ட பேசுற மாதிரி இருக்கும்.
எஸ் சார், எஸ் சார்.
அவ்வளவுதான். டோட்டலி 83 பேஜஸ் இருக்கு. என்னைக்கு முடிப்போம் தெரியல. பரவாயில்ல. இது மாதிரி இதான் கொஸ்டின், உனக்கு நிஜமா வரக்கூடிய கொஸ்டின். வாட் ஹேவ் யூ ப்ரிப்பேர்ட் ஃபார் த இன்டர்வியூ? வாட் இஸ் டிஎஸ்சிஆர்? வாட் இஸ் கிரெடிட் டிஃபால்ட் ஸ்வாப்ஸ்? அந்த மாதிரி கொஸ்டின்ஸா கேட்கறாங்க. வாட் இஸ் பிளாக் மணி? தென் கொஸ்டின்ஸ் வேற சப்மிட்டட் பை ரெஸ்யூமி. பென்ஷன் ஃபண்ட்ஸ், பென்ஷன் ஃபண்ட் ஃபார் say 20, I thought they were asking. ஸோ பென்ஷன் ஃபண்ட் பத்தி எனக்கு தெரியாதுமா. அந்த என்பிஎஸ் பத்தி படிச்சுக்கோமா, தெரியுமா உனக்கு?
சார், என்பிஎஸ் இஸ் a national pension scheme. in which சார் அது எப்படி சொல்றதுன்னா
இன்னும் கொஞ்சம் படிக்கணும். இதை படிச்சுட்டு வாமா, நாளைக்கு பார்ப்போம்.
ஓகே சார்.
Thank you so much. We have studied a lot. So I have given
Yes, sir.
you what we are going